just purely on the durational trades. And this is where we are at the present moment, guys. The 10,000 is at $39,700. We've made $11,700 today. There has been obviously a very big up move. You'll see that on the trade here. There was a very, very big up move. We made a lot of money from that phase. Not because of this part of the trade, but because we were actually buying it from Friday, and we had an overnight trade that was still on play. We had this bottom edge buy-in here from the overnight session on Friday. And when we came in this morning, we were already sitting on about $9,000. So we've only added an extra 3,000 this morning, but 9,000 of that was this buy trade, and then the big breaker north, which obviously made a lot of money on the durational side of it. So yep, 10,000 to 40,000 inside of that period. That's not too shabby. Shabby. It's not too shabby at all, is it? No, it's not. It's quite good actually. Anyway, so looking at bonds, we're in pretty good shape at the moment. Still liking what I'm seeing. Not really getting into the heat of the moment to start flipping this just yet. We've got interesting break-evens developing in the background. So that was a sensational trade actually on treasuries, wasn't it? We were long bonds, as you know, and killed it. Absolutely killed it, guys. We got long bonds off the ultras at 4s. We went all the way up to 8s, $1,200. $1,200. Yep. Pair contract on the UBs. It's basically straight out of a classroom we did this morning. Straight out of a classroom we did this morning. So we've got Monday Club this afternoon in half an hour, so we will take a look at bonds tomorrow, but we'll also take a look at it before Monday Club class today. And you'll be able to see what it is I'm trading. I'm trading the bonds based on the developing stories of the curve. There's a lot of noise in the markets just now, so during these noisy periods where we've got oil upside down and back to front, and equities upside down and back to front, and risks coming in and risks going out, it's sometimes nice to find the safety of the bond market through the curve. And the reason for that is because the curve is the main go-to ingredient for bonds. It is the bonds. If you look at oil, there's lots of different things can go into the oil markets themselves, the equities, they can have their own drivers. The dollar can even have its own drivers because of risk on and risk off unwinds. But at the end of the day, the curve is the curve. It doesn't change. It's always the curve. It's always the first opportunity to go to in terms of a dollar story. In terms of a bond story. So when I start out trading bonds, the first thing I start out trading is the 2s, 10s. This is the big curve. Now, why do we put the 2s, 10s on the chart? Why are we starting with a 2s, 10s chart? Now, what I'm doing for the 2s, 10s, guys, is I'm doing a 4x2. 4x2. And the only reason is because it's the same as a 2x1, but it's because of the fact that we were doing some numbers. So you might be wondering about the numbers behind it. But why do we put the 2s, 10s? We put the 2s, 10s on the chart because it is the industry standard, right, Steve? It's the industry standard for the planet for the curve trade, 2s, 10s. So this is the one where levels are incredibly important. If we zoom out a little bit, does anybody see any levels that might be incredibly important? Well, what about this level here? Is that not incredibly important? I'm right, it is. So that level's really, really important in the background. What about this top edge? Is this top line here not possibly really, really important? Well, of course it is. So when we start recognizing that the key levels are incredibly important, we start to be able to draw them on the screens and start watching around these areas for opportunities. Pretty obvious. Let's get into the 2s, 10s. So this is the 2s, 10s since the London Open, Frankfurt Open. You can see that there's a lot of opportunities. The main opportunity you'll ever get in bonds is when the 2s, 10s diverge from the 2s, 5s, that becomes the 5s, 10s predictor. So let's take a look at the 2s, 10s against the 5s, 10s. Let's take a look. No, not that one. Okay, here we go. So the main trade we can always trade is this one here. Why? Because this gives us the 5s, 10s predictor. The 5s, 10s predictor gives us some real money insight into the directionality, because it's a little bit more edgy, it's a little bit more aggressive. So what are we going to be doing? Anytime the blue line diverges from the candlesticks, we're going to do the exact opposite on treasuries. Simple. So the big trades that we've had on this one so far has been this bottom line, buy trade here, this buy trade here, this sell trade here, divergence on this background trade here. You can see there's a little bit of bond divergence there. So this trade here, not this, not this, not this. This was actually setting up at the time. You saw that actually because we called it in the room. And then this one is probably the biggest one of all. The biggest divergence we've had today is this one here. So these are all the divergences we've had against the curve. Great news, I hear you say. Yep, absolutely great news. But what about these three small ones in the middle? Well, it's always enhanced if we start seeing the belly of the curve actually already moving. So when we see the belly of the curve moving, we're in great shape, because sometimes these two lines look as if they're about the same, but the belly's moving itself. That gives us an extra bonus, an extra Brucey bonus. Let's take a look at the belly. 5s, 10s on a 3x2. Here's the 5s, 10s on a 3x2. So what we're looking for is that short-term movement on the belly. You can see on the right-hand side, I'll take you along to the right-hand side first of all. You'll see this does not line up. This does line up, so this one's even better. This one lines up, so this one is even better. This one lines up beautifully, so that's even better. This one is divergent. This one lines up quite nicely against the belly. This one, divergent, only divergence. So this is probably the weakest of all the trade signals. This is the most dangerous of all the trade signals. As we come off the top edge, you can see that there is a divergence on the belly of the curve. You can see that the highest high was made way over here, so there's definitely a huge 2s premium to this. So I want to take advantage of that huge 2s premium. And into the bottom edge, you can see a bit of divergence, not the strongest signal, but a little bit of divergence starting to creep into these low prints here, and an opportunity maybe to grab a bit of business. Now, obviously, if we get a divergence on the 2s, 5s against the 2s, 10s, that would be absolutely brilliant down into this area here for a full reversal trade. We could start annihilating top edge bonds at that stage and absolutely take it to the cleaners. Okay, so now we've seen those trade opportunities. We've obviously got other things we can add to it. We could add the inflation break-evens. When we add the inflation break-evens, of course, if we're looking at the 2s, 10s, we should be looking at the inflation break-evens, shouldn't we? The 2s, 10s should be the same. So let's take a look at inflation break-evens. And when we add the inflation break-evens, we can already imagine that this buy trade is a little bit awkward, because inflation break-evens is only just starting. The sell trade looks reasonable, but obviously this has only started, so we're obviously having to rely on some macro reads. These buy trades look as if they're okay, because we've got a bit of directionality. This sell trade looks even worse. This buy trade looks brilliant. This sell trade looks as if it's starting to develop, but this cheap bottom edge here looks really quite discounted into these low prints down here, doesn't it? So there's definitely an inflation break-evens angle to this. What else? Well, we can look at the US inflation break-evens, 30s. Since the US inflation break-evens have opened, you can see they've only went in one direction and one direction only, and that is straight down. That's why I've not bought this at the present moment. So US inflation break-evens are straight through the toilet. And that's why I'm not buying into this just yet. Very simple stuff. Very simple stuff. So obviously these are all reversal trades. If these are 2s, 10s longs, if we're steepening the 2s, 10s curve, we'll be selling bonds, back-end bonds, right? So if I'm selling the 2s, 10s curve to flatten, selling the 2s, 10s curve to flatten, selling the 2s, 10s curve to flatten, I'm going to be long bonds. So every arrow, the bond will be doing the opposite. So if we think about that and we put the bond overlay on top of this, you'll see that this buy trade on the 2s, 10s is a sell on bonds. This buy trade is a sell on bonds. This sell is a buy on bonds. This buy is a sell on bonds. This buy is a sell on bonds. That sell is a buy on bonds. This buy is a sell. Got the squeeze. This sell is a buy, and that was a big up move. That's the most recent trade. Everybody on board? Absolutely right. Incredibly easy to make money with bonds if you just follow the curve, guys, because it is the go-to trade. It's the #1 go-to when all the rest of the world is falling into disarray. It is our number one go-to piece of kit, guys. Absolutely. Absolutely. So we're starting to see a bit of value